further ado, Michael Turpin is making his way up there, and hopefully Michael can introduce the panel.
And hopefully we've got most of the panelists. We flew in. We had a few that weren't able to make it. Panelists, come on up, and I'll sort of have you introduce yourselves. Adrian and one of the gentlemen I haven't met yet. Panelists for the financial conference, please come up.
Hey everybody. Hey Michael.
Sam. So we have Adrian.
Yeah.
Yep.
Do we have only three of us?
Let's go through one more, right?
Johnny?
The three? Okay. Okay, well, welcome to the investor panel. So, I've been doing a few of these over the last couple of years. I started with Sam there and David Johnston 2 years ago, Bit Angels, which in the wild-eyed days of May 2013 at the very first Bitcoin conference, Bitcoin Foundation conference. That was, by the way, the first time more than 100 people have been in a room together for Bitcoin, just to show you how young this space really is. And we were looking around, and that was when Coinbase had announced its A round, and that they raised $5 million. Of course, since then they've now gone and raised a lot more than that. And we were chatting at the cocktail party afterwards about there's a lot of startups and there's no angel groups, and we all decided to start one, and we're now at about 600 members globally. I since then also, I haven't seen Nick yet. I think he's supposed to be here, Nick Sullivan, and Gil Pinchina and I now also run a syndicate, the Bitcoin Syndicate on AngelList. This is for investments that are a little bit further down the road. Bit Angels is still really focused on sort of your early stage, anything from a napkin, an idea, to ExpressCoin. I think got their entire round from one of our presentations, and they've gone off to raise a lot of money since and moved to Los Angeles from the Great Northwest. And so in 2012, there was $2 million of investment by venture capitalists, and almost nothing by angels in the Bitcoin company space. So when we're talking Bitcoin investment, we're going to talk about two things: investment in the currency and then investment in the companies. And this year, the big word has been the blockchain. Andreas Antonopoulos, who's actually been one of the biggest proponents and best-known spokespeople, I just saw him speak in Amsterdam at a televised webcast event a couple days ago, and maybe it's because there was government people in the crowd, but he said, "Oh, no, it's all about the blockchain now. It's like if you're investing just in Bitcoin, that's not even investing, that's gambling." And this is so different than what even a year ago at Coin Summit, you had everybody agree that, well, up until now, why would you want to invest in a company? You got execution risk, you've got, and you're never going to make as much money if you just invest in Bitcoin. And pretty much for 2009, 2010, 2011, 2012, there's almost no company you could have invested in that you would have done anywhere near as well as the 100x, 1000x that you've gotten just simply, buying Bitcoin or mining Bitcoin. Now all of a sudden it's like, I feel like we're in the days of when Facebook went public at $40 and dropped down to 17, and everybody's like, will they go out of business? And of course, everybody was bashing Facebook right now. What are they now, at 80, 90? So I'm going to start out with one currency question, then we're going to switch over to the companies for the rest of it, which is, are we at a Facebook moment where $225 is pretty undervalued, or is it just going to keep on sliding down to nothing and it's all going to be about the blockchain and it's not going to matter whether it's Bitcoin blockchain or the IBM blockchain? And then I will start with you and just give your sort of background, what brought you into the space, and then you can answer the question.
Okay, first of all, this one is not working. Okay, thank you. Let's try this. First of all, thank you very much for having me being here. My name is Lingwen Gu, and I'm an investment advisor with IDG XL Capital Partners. And we have been in this space since the very beginning. If you look at our portfolio companies, you will see we actually are the very early stage investor to Coinbase, and we also lead the investment to Ripple Labs and a lot of other companies. And for me, my background is pretty simple. I got my computer science PhD degree from Carnegie Mellon University, and you can see that's the reason where I come from this domain. And for the company and for me, and we combine actually invest not only just those companies like I mentioned in the US, and we also invest a lot of companies in Israel and in China. And even though currently people may know, and in China specifically, because the government actually put a lot of negative views and regulations on Bitcoin and the related cryptocurrency industry. However, you still see a very booming business in China. The reason is because our philosophy is not only just invest in Bitcoin itself, and we also invest the protocol behind it, and the algorithm, the wallet, and the merchant side, and the consumer side, etc. I will stop here and pass the microphone to my friend.
Yeah, thank you. So I have two jobs in the Valley. One, I work as a business development manager at Perkins Cooley law firm, and the other is I work as a special advisor at Andreessen Horowitz. It really is just by coincidence that Perkins Cooley on Page Mill Road is pretty much the leader in looking at how to help Bitcoin and virtual currency businesses work through the regulatory process, and then Andreessen Horowitz is pretty much the leading, by dollar amount, venture capital firm in investing in Bitcoin. So I tend to think of it, Michael, like from between Page Mill and Sand Hill Road, somewhere in the middle there is like, I guess, the center of Bitcoin, and maybe it's that big dish that everybody walks around.
Satoshi's under a bunker somewhere.
Exactly, somewhere up there. So, I never thought about it like comparing it to Facebook, dropping out, but that's how it's always been kind of in my mind. There was amazing excitement when Bitcoin got to around $1,200 or so, $1,200 US, and then it's been a steady drop in the price, but the activity of the developers, of the investors, of the lawyers, of everybody in this industry has probably gone like whatever the equivalent is up in that drop. Like it's been like a complete inverse. Like it's definitely 6 times the amount of involvement and hard work and effort. And so my whole thought, like super unscientific, is always like it's gonna find some place where it drops to the bottom, and then it's going to be a steady climb, and then once it gets over some amount again, like if it gets back over to 1,000, 1,200 again, then it's just going to shoot through the moon. And the reason it won't fall again is because right now everybody's able to work and quiet, and there's not all this hype anymore, and people are kind of developing the right software, the right ideas. And you see, and we'll get into this in the discussion, that when an idea percolates now, I mean, I'm talking 2015, there's no shortage of top-tier venture capital firms ready to come in and put a lot of money behind it.
So before I introduce Sam, or have Sam introduce what he's been doing lately, I wanted to comment that in the very early days, people were saying, well, the reason why you want to invest in the coin and not the companies, other than things that I said, it was almost like a given, and now it seems to be like a minority opinion, was how would you have liked to have been able in 1994 to have invested in like a piece of the internet, and you actually own part of the internet, as opposed to just hoping that Yahoo would be better than Schmahoo. And you have to pick the right one, right? Because there was a lot of for every eBay there were like 50 companies that wanted to be eBay or more, and they all melted down in the crash, and the other ones went down and then came back bigger than ever. And I kind of felt that way until all of a sudden, I looked at how much of the blockchain actually is dependent on each individual Bitcoin, because even though, if again Bitcoin becomes the predominant way that people actually say fill up those 2 million wallets that don't have bank accounts in the third world, and it's Bitcoin and not a fork of Bitcoin or a Visa coin, okay, then those transactions will mean that there's more supply than demand. More demand than supply, and the price will go up. On the other hand, if it's all blockchain related, you literally can go and do an awful lot of programming on like one Satoshi, and even if you have a lot of demand, you have 100 million Satoshis for one $200 Bitcoin. Sam, you ended up with David kind of spinning off, and I'm an investor in this fund, raising money for the DApps fund, which is really the only fund out there that has a single proposition of we're going to go and invest in coins that are going to be doing blockchain related activities. How do you sort of see the, because you're buying coins rather than equity stakes in companies, how do you see that playing out in the DApps market?
Sure. So 3 points, a little bit about me, the price of Bitcoin, and the future of DApps.
Yep.
So hello everybody, this is Sam Yilmaz, managing partner of Decentralized Applications Fund. I have a background in a variety of fields, the latest of which is self-assembling materials. A fan of within systems, sort of intra-system signaling to give rise to organizations that self-sustain, and free market is in fact one, and also decentralized applications. So I think Bitcoin is itself a decentralized application, so I see the resilience built into the system to be self-organizing. And even if the price maintains in the 170 to 250 range, I think we're sort of near the bottom, and I would suspect that we can see another 10x in the next 20 years, in the next 2 years, where we get a valuation of about 2,000. Sort of my hypothesis. But so what does that mean about decentralized applications? So clearly, Bitcoin is a decentralized application that focuses on this one specific vertical of money transmission, and also just a small component of data storage in the blockchain. There are many other decentralized applications we can build inspired in the image of Bitcoin. So that means if you take Bitcoin as a decentralized application, that you gain access to the services of which through the token, you have to have the token in order to transmit your money. We can build other applications in that hypothesis, where we can enable people to store information, gain access to computation power, decentralized identity verification, notarization services, all through decentralized applications of distributed service providers. So I see the future to be very healthy for decentralized applications, and like all businesses and all investments, it's our hypothesis. But we stand behind it, and our results have shown in preliminary distributions we were able to perform to our limited partners, which Michael, you'll appreciate. We were able to perform about 360% return for our limited partners. I think the future is still strong for decentralized applications. And I encourage all of the entrepreneurs in the community.
And now that was pretty much on the strength of MadeSafe, correct?
Yeah, that's mainly MadeSafe because that's the most developed application we've had thus far.
And yet it hasn't launched yet. So I think a lot of times when you're going after coins, you have a lot of the trading dynamics as opposed to when it actually launches, if it does exactly what it says it's going to do, and they start, they've already, they have a lot of developers, so that's really why it's, pretty much tripled in price since the ICO.
Right.
And the lawyers hate using that term, but that's sort of what people have been calling it, an initial coin offering. Excuse me, crowd sale. But which is actually the second most successful crowd sale of all time. It was about $7 million. But I mean, just to sort of like summarize kind of like what's been happening with the DApps fund. I mean, a year ago, the DApps fund raised about $6.5 million in Bitcoin and Mastercoin, and then spent it, you know, buying sort of early, in many cases discounted tranches of Swarm, MadeSafe Coin, now Factum, Storage. Am I missing any?
Yeah, there are a few more.
Yeah, a couple smaller ones. So it almost sounds like an arbitrage play where you're sort of taking more developed coins, like obviously Bitcoin at that point was $600 and it's gone down. So if you took your $600 Bitcoins and your, I think Mastercoin was about $60 and it's, you know, $1.50 now. So obviously the investors who invested in both Bitcoins and Mastercoins didn't just triple their money, they more like 1,000. I mean, my Bitcoins, if I kept them, would be worth a third, and now the MadeSafe is worth 3x, so I guess that's a 9x. So I guess the question is, as these things come out, can it be sustained if, say, Factum develops something that, you know, and MadeSafe, that if you only need a very small amount of it, at some point, I'm perplexed. I don't know the answer. And actually, you know, like other people's opinion in terms of, you know, can the value of the currency, if the main thing isn't transactions, it's software, support, you know, really large valuations, which of course now they're not really large. I mean, MadeSafe's tripled, but it's still only a, what, $12, $15 million market. So.
Right. So the question being, will it be sustained?
Will be sustained when it's not financially driven, when it's kind of speculative off the value of software. Right. How do those dynamics work?
So the value of software is recapitulated in the value of the tokens, because in order to gain access to the software, you have to use the tokens, and the way that these systems are built up. So our hypothesis is, let's have a mechanism that takes advantage of digital currency that addresses these sort of corporate culture issues of employee ownership, of aligning incentives, of transparency, and forming a token that put everybody in the same boat, incentivize people to evangelize the services of the software, contribute to the future of it. Sort of was a new model. And so I think that it will be sustained to the extent that we can rely on people building value for each other in these particular verticals of computation, storage, internet access, notarization, identity verification, which are the 5 major areas we've taken our plays in.
I mean, just to kind of broaden out the discussion, you know, I think if you look back a year and a half ago when, you know, Bitcoin was getting to its peak, it really was based on pretty much the investing in the coin itself. Not many people were really talking about, you know, what we're talking about now, the layering on of technology, having a platform where kind of the best developers, the best software engineers in the world could then figure out all the different applications for it. And so I think that it's just a really natural thing if you just take a step back and look at the totality of kind of the whole Bitcoin evolution over the past couple of years. And so now, I really do feel like, as I said earlier, that the hard work is happening, which is going to allow people, I mean, to really invest. There have been a couple of key companies. It's amazing how much has been invested in companies, as you said, just if you look at 2012 through 2015, how that's just escalated the amount of investment. But I think if you just take a step back, it's very easy to see that that's just the tip of the iceberg, that the number of software and engineering solutions that are going to come over the next couple of years are going to allow people to invest, which is going to allow the ecosystem to become stronger, which is going to allow the coin to be more valuable. Yes, sir.
Maybe I will just start something a little bit off the tangent. And we have a theory which is the first one of the first generation is not necessary to be successful. However, one of the first group of the first generation will be definitely successful. So now back to this question, Bitcoin, the price, where it supports itself, I don't know. But one thing is for sure, which is definitely one of the type of the cryptocurrency of the first group will be successful for sure. Which one? I don't know. Stellar, XRP, Bitcoin, Litecoin, I don't know. But again, this is depend on the demand and the supply of the market. Then now we're back to the fundamental of the question. Where is the demand from the market? If we look at a typical banking system, what they do, they actually do very simple things. They do deposit, they do withdrawal, they do remittance, they do international currency exchange, and they do payment. Now let's just try to match the cryptocurrency to all these applications. Do they have very useful applications? For sure. And can they apply to every single domain I just mentioned? No. Then what are the typical domain cryptocurrency can be used here? And I can summarize it into two categories. Number one, which we call small amount credit usage, which means if you just want to borrow a little bit and do not just try to hurt the nerve of your lender a lot, then this is a typical domain. And the second one would be just the international currency exchange or the remittance. That would be another typical application of cryptocurrency. And you can see actually right now the usage of these two domains and increased a lot. Then you can also see a lot of different type of cryptocurrencies. They are competing with each other and into this domain. So back to the original of the question, for sure, I'm pretty sure the demand will be stronger and stronger. But which one will eventually be the winner? That's something I don't know.
So I'm going to ask two really quick one-word answers. And I wish Matt was here because he's actually a guy who not only does the companies, he also does the currencies. But I'm sure a lot of people in the audience have somewhere between like one and dozens to hundreds of Bitcoins that they may have bought at a certain price and are wondering, should I be keeping them, selling them, buying more, doubling down, getting gold instead. One-word answer. Bitcoin, $223.80. Buy, sell, or hold?
Wow.
Today. Buy, sell, or hold?
Well, to me, because I'm an investor, well, I'm just joking. Because the money is coming from someone else. Or buy.
Honest answer, I like it.
Sell and let me invest it.
So just the coin, Bitcoin.
Yeah, I say buy and hold.
Okay.
So it depends on the kind of game you want to play.
Well, you just said it's going to be 2000 in 2 years, so you better say buy.
Sure. Yeah, if you have that horizon, sure.
Yeah, I would say buy/hold in the sense that I think it could go down a little bit more, but no lower than like 170, 180. We saw a violent reaction when it was briefly manipulated down to 150. But even if it doesn't ever get to the holy land of the 400,000 of the Winklevoss twins' dreams, I think it still has a better chance of getting to 10,000 in 10 years than to $10 in 10 years.
Right,
So.
and at that point, the difference between like $600 and $200 is not going to mean anything.
Now the interesting thing, of course, is going to be if something trumps it. And that would probably only happen because of the blockchain, and the blockchain being somebody else's blockchain. And so because of, you're an investor obviously in Ripple, and you've seen what's happened when that got forked to Stellar. Ripple's still bigger, but its coin price has been going down even though they've been raising money. I mean, there's a lot of different variables here. What is your, and I asked this a year ago without the part two of the question. A year ago I asked everybody in Miami, what's your basic investment assumption in this space? Now we're going to companies again. Now I'm going to ask, what's your basic investment assumption and how has it changed in the last year?
Well, that's a really cool question because that's something like very important for me to make a decision because, like I said, this time I'm not joking. I definitely don't want to lose my LP's money for sure. So in that case, I have been thinking about this for a really long time, which is if typically there are two types of companies now in this domain. Let's say one type of company, they try to directly compete with banks. They always use the slogan, decentralization, and they try to attract the eyeballs, and try to compete with banks. And this is type of company. And on the other side, and then you see some other companies, they just build some very fundamental algorithms and protocols and try to integrate with banks together and try to be part of the facility of banking system. And between these two types of companies, if I only have one choice, which one should I vote? And definitely I will just go with the second type of companies. And not because I invest in Ripple Labs and now I kind of like doing commercial for them. And this is like a typical, my philosophy the first time when I talked to Chris Larsen. Because if you just want to just raise yourself from a very tiny baby and try to compete with those gigantic banking system to say, hey, I want to compete with you and I want to do decentralization. No way, there is no way you can be the winner. However, if you say, hey, I know, even just for Wells Fargo, but I know if you want to transfer money from your US branch to your UK branch, you still have a lot of trouble. And now I can give you some part of the solution, even not the whole solution, to give you a little bit of convenience. Do you want to let me in? I'm pretty sure bank will say yes. So that would be like my summarization of my philosophy if I want to invest only just one type of the company.
So, I think most people are aware that Andreessen Horowitz thesis on investing in general, which is software has, is, and will be eating the world. And so that's really a thesis by which our investments in Bitcoin fall under that. And it's, we hear Mark talk about this, it's really about, disrupting the way that money is moved around, invested, saved, held, almost to a point where it's offensive that you have to get permission and then pay someone else to be able to do any number of things with your own money. And so a technology that allows you to more fastly, with less expense, do with your own property, with your own money, whatever you want to, then just makes perfect sense and hopefully flips the old way of doing things completely on its head.
So I'm gonna challenge part of that in that, and I think Mark Andreessen probably, and I've said this in many talks, has more credibility than anybody in the space just what he's done on the internet and when he's sort of called things before like client server is dead and things like that. However, if it's all about software and software eats the world, the two biggest investments at this point are Coinbase, which is not really an innovative software platform. It's really, kind of a fintech play that's going against other competitors in the space. It's not really the innovation of the software. And then 21, which, is kind of involves some mining and hardware stuff. I mean, you would think that if it's software eats world, they'd be, maybe that's the next 10 investments, they'd be going after, being number one in smart contracts or being number one in, sort of decentralized routing or storage.
Sure. And I certainly don't want to get into any particular argument about how much software makes it a software company, because in our portfolio we have every range. But we were just talking about a general thesis, and I think you certainly could look at some amazing software in both of the companies that you named, and as they continue to grow, they're going to build out their engineering and software capabilities. It's really that ability to both combine a real hard engineering focus with a real sense of disruption and vision on the future that I think, to expand out, I think is a whole value investing. And so you do, again, you can look at our one particular firm, but if you look at both of the investments, if you look at Coinbase, particularly the most recent investment of $75 million, and in 2026 over $100 million, we're a big part of that, but we're not the only part. You've got Coastal Ventures, you've got TFJ, you've got Peter Thiel, you've got Drew Houston. I mean, if you talk to any technology company in any vertical that's trying to raise money in the Valley or elsewhere, I mean, you talk about having that A-level list of investors, but people would fall all over themselves. And my point to, I'm sure I'm preaching to the choir here, is this is the technology that all of us think is fantastic. It's just great to see that some of the best thinkers in Silicon Valley also agree with us. These are things that happened a year or two, or at least happened within the last 4 months.
And Sam, I would ask you, how has your investing criteria changed in the last year relative to decentralized applications? Was there different criteria looking at a Factum than, say, looking at a MaidSafe or a Swarm?
Right.
Well, for the two parts of my answer, one is the Bitcoin 1.0 world. We clearly have the mining and storage and exchanges and transaction services. And in the Bitcoin 1.0 world, I refined sort of key drivers of value in my perspective as immediatization of revenues. If you can bring revenue to the merchant faster, you're creating value. The second one is microtransactions. If you're able to settle balances without waiting for a meaningful amount to accrue, then you're creating value. And if you're creating services for the unbanked, you're creating value. So that's my Bitcoin 1.0 answer. For the decentralized applications, really our perspective has been to focus on the key services that will be required for other apps to be developed. Say the Lazoos or the likes of other second or tertiary value-add services like transportation. They will require access to distributed internet. They'll require access to distributed compute, storage of crucial information, validation of identity, and so forth. So we've been focusing mostly on infrastructure level plays in the distributed app space.
So, let's see. There was a controversy kind of in this last week about, can we have the blockchain without any coin? Can we just simply have a centralized IBM or Qualcomm or whoever just says, we will go in, we're a centralized trusted authority, you're going to trust IBM, and particularly if we're under contract to the government, and we'll make a Fed coin, and it's not really a coin because it's just basically we are going and replicating all the principles of the blockchain within centralization. Now when Ecuador said that they were going to do that for their e-keto, people laughed at them and said, oh great, it's just going to crash again because they're going to mismanage the economy. But when you're talking about having, some of the aspects of say, non-financial blockchain applications, smart contracts, title, etc. If you have a giant company that has a record of trust like an IBM, is that so far-fetched that people in the technology space would trust them versus trusting the algorithms of mining? And a year ago, people would laugh or even having asked that question, but it's being asked now, and I guarantee you in corporate boardrooms all over, they're not saying how much Bitcoin are we going to buy and who are we going to fork. Some of them are saying, hey, can we do this without a coin? So I'd like everyone's thoughts on that, because that's, I think, a huge turning point if that actually starts happening. And, if all of a sudden the IBM start deploying hundreds of millions of dollars into building their own software to compete against what we know as the blockchain versus investing in blockchain companies will be a very different dynamic in the future returns. You're the techiest on the panel.
Well, that's a very interesting question because we probably already see something is happening right now, right? Because blockchain-based company we see a lot, but what is the key idea of blockchain? It just try to generate a decentralized and a mutual trust ledger system. So let the entire internet know that is something trustwise. But the same thing, and we see from Ripple, and they use a consensus-based, right? And that's something kind of compete with blockchain. And now if we just move one step further, and we say, yeah, we do not apply into financial industry. And let's say, can we use the blockchain type of things for voting for Hillary Clinton? Probably that's something also possible. So I definitely believe the trend will continue to go on, like the decentralization in certain way and in certain domain, for sure.
Well, that wouldn't be decentralization. That'd be centralization with consensus.
Exactly. That's right.
Which is an interesting concept. And really, the first consensus without decentralization was Ripple. And, Ripple, when it first came out, and they announced, Andreessen Horowitz investing at that very first Bitcoin 2013 conference, the old school Bitcoiners, they just thought Ripple was the worst thing in the world. There was like, and the question is this going to be something that just simply was controversial with the Neanderthals who, judge everybody by how old their Bitcoin talk address is. I always like to say that what happens in Bitcoin you can track back to sort of something that happened in the internet 20 years ago. And I remember in 1995, if you talked about putting advertising on the internet, you were being called like really nasty names, and like they wanted to shut you down, get you out of business, because the internet should always be free and clear, and there should not be advertising. What's running the internet now? I mean, the biggest company on the internet is all advertising. So is this 10 years from now that like most of the blockchain will be centralized, or do you think that Bitcoin still has a shot at keeping it decentralized?
Well, I tend to think that the last 6 to 9 months, where people have started to say, okay, what are all the different applications, uses, businesses that can be created with blockchain is where people who originally thought about this knew this discussion was going to go. But it's really like completely speculative to figure out like all the different ones that will be successful. I don't know. I don't think anybody can know at this point, but I think you want that. I'm glad that people are now figuring out the different applications, and the more the better. So I mean, the vision is more like the Bitcoin or financial currency is just a part of all the different things that you can do within a blockchain. I tend to think, to your first question, that having a mega big company, especially one like IBM, build a competing technology is a really, really small chance of that happening, with all of like the, kind of the energetic, bright minds that are working on this. I think the history of kind of how technology grows and creates doesn't really tend to support that, but we'll see.
So the two options are, Bitcoin wins, and it's like the internet versus AOL and CompuServe. The other one is, do you really go on the internet these days, or do you go on the stacks that take all the value, like Google and Facebook and Amazon? So if IBM, they don't necessarily have to create it from scratch. They're still using open source parameters. But if they said, hey, we're now going to have blockchain-based blah, 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 but it's not using a coin, it's using proprietary IBM technology. I'm just picking on them because they've kind of been talking about it, but there's, trust me, 20 other companies that are thinking the same thing. That adds their market cap, and they can say, we have patents on this now, and they compete against, native things, and I guess it's who creates the better software.
So I think it comes down to alignment of incentives, where the token is a very clear way to organize a large group of people around the same mission, where if you had a central entity generating the software that is delivering meaningful and valuable services, and there was a clear mechanism for communication of value generated outside of the token, where if the system got corrupted, where it had undue influence from unwelcome forces, it could lose value or functionality, those systems could also work. But the reason why money exists and is a healthy tool to organize large groups is because it offers a simple signaling mechanism for a large group of people to connect with each other and meet on a common denominator. So it's conceivable that there are other options, but a token seems to be a straightforward and easy way to accomplish that. So I think it will be hard to replace with a more centralized, non-token system.
So we're obviously sort of, in the era in Bitcoin, like again we were 20 years ago, where, I remember panels in 1996 in the travel industry, and the general consensus was, you've got to be kidding, there's no way that online travel will ever work, the airlines won't allow it, they own a piece of the Sabre system, they have to support the physical brick-and-mortar travel agents, these online services like Travelocity will be out of business very shortly. Instead, it's the travel agents that are largely out of business. And so these massively disruptive things that create great value, I have no doubt that things like title companies will be dodo birds with the blockchain applications, however it's done. On the other hand, you look at someone like Facebook, billion users against, say, Scenario, who's token-based, and they're going to share some of the profits with no users. So, in 20 years, will Scenario be, or someone like them, be as big as Facebook? or will the incumbents just be too big to fail in this area, or take on some of the aspects of the new technology? And that'll be sort of like my last question. Then we're going to turn it over to the audience. So, will the incumbents today that are competing against the blockchain usurp it or be usurped by it?
Again, I will just probably start from something, again, off the tangent a little bit, which is, well, what like we talk about banking system and we talk about cryptocurrency, we actually have a little bit interesting argument, which is for all those cryptocurrency-based companies, what are their ultimate goal to establish their business? Are they really just try to teasing those early adopters, or actually they look into their ambitions to the Main Street people? So eventually you can see these are, again, two types of companies, totally different. Again, let's say something different, which is now, I'm pretty sure most of you currently sitting here, you receive a lot of offer letters from Citibank, from Wells Fargo, Chase, or maybe Bank of America to say, hey, open a new checking account, we give you $250. Or maybe sometime like they even increase to $400. Why the marketing acquisition cost is so high? Because the entire market for prime customers are already saturated. And it's very difficult for an existing customer switch his direct deposit and a lot of direct the payment and to a new account. Now we see the new opportunity for those cryptocurrency-based company. What they do is, hey, do you want to convert some local fiat? You say yes. Then open an account with me and deposit a little bit of money. And they actually just acquire you with no marketing cost at all, or just very little bit. So you can see this is like one direction for those cryptocurrency company. Eventually the ambition of their goal is try to be a global retail bank. It's not just for a cryptocurrency company, versus some other companies, they are still very geeky and only just want to play with those very technical people like me. So those are very two different directions, which I think not necessarily answer your question, but that would be something I think would be very interesting for us to think about, no matter being an investor or like be the real player in this domain.
Well, not so much asking the question, but I was hoping to get through the entire hour, since everything's about the blockchain now, without mentioning the B word, and you just said bank. So I've not asked anything about banking, legal or regulatory this entire time, and I almost made it through the end. But there was one last question I want to answer, so instead of having the two of you answer the same question that I asked, I skipped one by.
I said unbanked, which starts with U, so.
There we go. That's true. Unbanked is different. I had mentioned earlier that there was $2 million in VC funding in 2012. There was then $80 million in 2013. There was then nearly $300 million last year, and there's been almost as much this year as there was all of last year. So here's the question, and yet, I think this was sort of maybe a canary in the coal mine. Buttercoin just went out of business because they couldn't get their next round. With a lot of folks like Idea Lab and some other big names having put in early dollars. Is that sort of just an anomaly, and they're a lot of LA-based investors, or was it just simply a matter of a single company that was focusing too much on the next round and not enough on user adoption and execution? So my question is sort of a two-parter. Number one, are we in a bubble that's about to pop? And number two, will there be the phase of mergers, acquisitions, and you can't possibly have 72 wallet companies. Is that going to happen this year?
So I mean, I think so in the world of Bitcoin, there's there are going to be one or two companies that don't get funded on an additional round. I don't know enough about Bitcoin to even come close to comment on how they manage their company or their investing round. But this happens every day, all day, in the Valley and otherwise across different verticals and different types of companies. I'll hone in on the bubble question. I tend to see this as a continuing upward graph of investment, and I see it as companies becoming more like the startups that you're seeing in other industries, and that's just really, really strong engineering, people who may be new to Bitcoin, but really, really seasoned and mature around how to build a company in general. You know, you guys have probably been around longer than I have, but from what I saw in the early days, it was like really, really strong Bitcoin enthusiasts, people who have been waiting for the technology to get to this point, but maybe not product people, maybe not engineers. Now you're getting this best combination of both worlds, and so anyway, right now in Silicon Valley, if you have a great idea, a great company, you're a great CEO founder, you are going to get funded, and I think that's the trend for the next couple of years.
And my perspective is that there's definitely a correlation between the price of the token and the investment, given that we have about 6 to 9 months of relationship building between a company and an institution that deploys the capital. Say that we land in 7.5 month average, sort of a feedback time in the delay. But I think that sort of needs to be adjusted by the intensity of volatility or the intensity of the drop. So I would suspect middle of this year we'll see sort of a slowdown of capital deployed into digital currency applications that could further be supported by a significant increase in price if it comes at a welcome time. But generally speaking, I do foresee a slowdown because, you know, truth be told, venture funds do appreciate companies that have raised money before. And when the price is high, then everybody's an investor. When the price is low, then you have fewer investors for the VC companies, for the VCs to be inspecting and sorting through. So that's my hypothesis as to why we can see a decline in the capital deployed at the rate of capital deployed, but obviously the total capital deployed will still continue to rise.
I'm somewhere between. I think that you're going to see consolidation in some overinvested sectors. You're definitely already seeing it in the mining sector. We've gone from 30 companies in mining to really 4 or 5 that are viable. I think you're going to see that in the wallets. I think you're going to see that in a few other sectors. I think there's too many exchanges out there. There's 9 exchanges in the Philippines. And so you're going to end up with consolidation there. And then there might be a hiccup in terms of funding at different stages, but I agree that this year will still be higher than next year, and next year will probably be higher than the year before. And the only thing that would sort of hiccup it would be if there was some big meltdown in the overall economy, and that actually in some cases might help the Bitcoin price. We started about 5 minutes late, so I'm going to take 5 minutes for questions unless Alan gives me the hook. So questions, just raise those hands high. Got a great panel here. Yes.
So you mentioned decentralized applications and Bitcoin being decentralized, but then you talked about the centralized mining within Bitcoin. How does that equate in your hypothesis?
I'm not sure if I understand the question.
You need mining in order to obviously operate Bitcoin blockchain and make sure.
Yeah, 2 different things. Decentralized applications typically aren't even Bitcoin. They're typically app coins. They're typically coins that are proof of stake for the most part, rather than proof of work. Mining is proof of work, and when they say centralized mining, it simply means that you have mining pools.
So we talked about proof of stake. So moving from proof of work to proof of stake. So moving from proof of stake, how do you look at the different consensus models in terms of the algos, for example, answer as well? Because what I'm seeing right now with every proof of stake play is that nobody's actually looking at the algo or the consensus algorithm correctly. Everybody's just tweaking it to try and solve consensus, but they're not really doing a good job at it. So I just wanted to know, how do you see Ripple's consensus versus Ethereum's supposed consensus, or the different types of consensus plays that are there? Because it seems like I'm just seeing consensus. I don't know who has the right consensus, right? So this whole, this mental, analytics and the ability to really truly make sure that business default is correct, and you have all the different pieces working together. I just wanted to know what your take was on that.
So obviously the market is experimenting with different methods of consensus. There's no one right answer for all different applications. in the case where what you're trying to audit or ensure the validity of is something that can be accomplished with only a few players, then you don't need a whole network to come to consensus on anything. You can have a federated network that achieves a consensus and propagates the consensus to the rest of the network. Some applications are more appropriate, more suitable to one kind of consensus than the other. And I think we'll have the cues and signaling from the market on what is most welcome on what applications.
Is there a use case for MadeSafe?
Use case for MadeSafe being, sure, yeah. I mean, I'm not sure if I'm hearing your question
well, I'm just
right.
trying to figure out where are these use. I'm trying to like find use cases. Because I'm hearing a lot of talk.
MadeSafe hasn't launched yet, but they do have several white papers which you can read. Yeah, and then Newcoin also wrote a consensus a white paper recently. So proof of stake is still very early. Most of the coins you hear of are proof of work, and there are some hybrids, and so that's that's still an ongoing area, and we'll see what happens when different players do it for different reasons. I think for the most part, it's all about how can you get to speed of transactions and still have integrity.
The further point about I think you might be asking on the sort of use case of MadeSafe. Clearly, the value proposition is storage of data, and the use case is gaining access to a shared economy of unused storage. When you're looking at the consensus, sorry, Richard.
No, that's okay.
Why don't we take it off?
Yeah, I was going to say this is a technical question in the investor panel. So one or two other questions on investing. Anybody in the investing in companies or currencies? Surely we have to have one or two questions in this entire audience. We answered everything all the way over there, Micah.
All right, so there's a bunch of companies that get seed round funding pretty easily. I think in the Bitcoin space, there's a lot of seed and angel investors who are pouring money in. There's a lot of talk in the general investment space about a Series A crunch. We've got a lot of companies who started a year to 2 years ago who are now entering their Series A phase all at the same time. How do you think that's going to impact Bitcoin?
So the question is there a Series A crunch? Asked by Mike, who just raised a couple $1 million last week. Congratulations. I think that they've been talking about the Series A crunch, not just in Bitcoin, but just overall. There's a lot of people who are in the angel community who can write smaller checks to get people to the seed and super seed range of up to their first $1 million, maybe a little beyond that, maybe a bridge to the A. But the A is a much smaller group of investors, who, you can probably say, funds with the credibility and size and scope that can handle, being lead of a, $5 to $10 million round, and they're going to write a check for $2. You're not talking now hundreds of thousands of angels. You're talking now probably less than 100 entities that, other than strategic. And I think you actually have an easier time when you get to your B round, because then you've got thousands of strategics and a lot of the risk is gone. So the A is this kind of funny area where you prove your concept, you've got some revenues, but by no means is all the risk gone. So is there a unique A crunch right now with Bitcoin? And what will that mean for all these companies that have raised seed funding and have shown some real traction?
Yeah, I think so. I think in combination with the general A crunch, and then what you said, which I think is also particularly relevant, Michael. Just from what I've seen and talking to some of the investors in the Valley now, there's a patience around Bitcoin, which I think in long term, maybe even medium term, is very, very healthy. It's kind of like, as one investor said, I'm just waiting for the momentum to pick up. So certainly, if you're patient, waiting for the momentum to pick up, that means two things. One, yeah, there probably will not be as many people investing in C's as they did in A's, but it also means, and I think this person spoke for a lot of people when they said they're still very confident that the day will come. Let's let people do the work. Let's let them figure out let's let them prove their concepts. Let's let them develop companies that really are going to have lasting value. And then, as we've seen, as I said 3 or 4 times a day, these companies, once they do get investment, they're getting investment in big numbers.
First of all, definitely I agree with what Michael just said, because it's not only just for cryptocurrency, and even for P2P, and that's the same thing. And you can see it's pretty easy for entrepreneurs to get the seed round or even A round, but for B round and C round are much more difficult. That gets back to the very fundamental of, at least for IDG Excel, our investment philosophies. So what type of team or business model we actually want to invest? So there will be three things, right? First, we definitely look into the team members to see those guys actually make sense or not. Number two, we look into the business model. And then number three, we look into the execution ability. And that's very important. However, at the very beginning of the seed round, we actually a little bit loosen, and we do not want to match all these three things for entrepreneurs. If they can meet one or two, that's fine, and we want them to grow. Maybe at the very beginning, we just maybe look into the wrong direction. However, after they grow for 8 months, 10 months, or even longer than 1 year, and into the A round and the B round, we definitely can see if the whole team, the whole company, and the whole business model, and they match each of the criteria we set for them. So at that time, definitely a crunch is making sense, because that's something we definitely want those seed round companies compete with each other. Of course, not our own portfolio companies compete with each other, and to grow. And that's a nature thing. And also for investment companies, we also have a reserve, right? So let's say like if we just invest $10 million, and certainly we want to reserve maybe $10 or $13 million for the following round, and we definitely cannot just put all money into the seed round and then say, hey, bye-bye, just all good luck for you. So that's also the reason I think for a crunch is definitely making sense. But again, based on a specific domain, if it's super hot, then for sure, you're going to see more companies are going to get A round. But eventually, it will go back to the normal level. But I think the most important thing is, it would be better in a difficult time, you raise an A round, and then next time, in an easy time, you raise a B round, compared to the vice versa time, and that's definitely really bad.
Right. So immediately a sort of country demographic chart comes to mind where you have the male and the female, you have the ages, sort of like that, where you have these generations of startups, and you could sort of see a funnel where fewer and fewer get funded. And I think what's happening now is the narrow tip is being squeezed down. But what might happen as a result is the companies that do raise the Series A will have a relatively much easier time raising their B and beyond.
Okay, thank you. I think our time is up, and thank you to our panelists. And we'll all be around the rest of the day for any questions.
Work, use the restrooms, do whatever you want.